Sid, thanks for joining us on the podcast today. I appreciate your making the time.
No, that's all right, Jeff. Great to be here.
So I thought I'd just start with the basic question before we get into Maple and what you guys do. Tell me, like, what brought you into the crypto space? I imagine you had somewhat of a more normal life before you got into the crazy world that is crypto. What attracted you to that space?
Yeah, I began my career in banking, and I went from working deal side in institutional banking. So we were dealing with very large companies that wanted to borrow so they could run their lending businesses. I went from that side to working at one of those lending businesses so that I could see what it was like to try and run operations, and what it was like to be a client of a really large bank. And it was actually whilst I was there, I started learning about smart contracts. And so that was my first foray. It was not necessarily Bitcoin or the direct purchase of an asset. It was the investigation and researching smart contracts to see if there was a way that we could run our business more efficiently. So I kind of started researching it as like, is there a project here or an opportunity to run a lending business more efficiently by being able to program the transfer of money and program how loans might work.
Hmm. And was there?
Well, evidently there was in the end, because that's what I'm doing now for a living. But that was back in 2018, so mid 2018,
Early.
after the last big cycle, or before the most recent one. And there was not a lot happening in smart contracts with respect to this kind of thing. So lending and what is now called, what is now lumped together under the umbrella of decentralized finance. So when we started investigating that, I started reading all the white papers, speaking to everyone in the space. And then I wrote a white paper of our own that was the first Maple one in about January of 2019. So even still probably 12 months before DeFi really took off. So a lot of investigation. We actually had to pay me and my co-founder out of our savings to make a very basic proof of concept. We pivoted a couple of times. And then it was around late 2020 that we're actually able to get this idea off the ground because the environment had caught up. It would have been like trying to do Amazon or something in the 80s. Not the things of not that we're comparing ourselves to Amazon, but trying to do like an internet company in the 80s is probably what it was best characterized as.
Well, you should read. I just finished reading a book on Amazon, and they talk about their first attempt in streaming before internet and devices were ready for it. We had to only stream to a laptop, and it took like 6 hours to download. And they were like,
yeah,
good idea. Wrong moment where you didn't really have the infrastructure to provide the right experience, the right capabilities. But obviously, over time that became the way we all. It's hard to imagine the time before like streaming, right? Like what watching TV was like with Blockbuster.
Well, yeah. Look at the transition of Netflix, right? Like before streaming, they had to begin as posting DVDs in the mail, and then they were just at the cusp where they were both the kind of the very beginning and the wrong side of it, and then they managed to be the first to kind of do it. Maybe they weren't the first, but they're the ones that we know of today. Similar with Uber. Uber really couldn't have existed before you had GPS in phones. And there are still a number of things today that kind of prevent our business from achieving super widespread adoption. On and off ramps are probably one of the key picks and shovels that we want to see come to the market.
Well, tell me what you guys do, or not specifically just Maple, but like what was the idea of what was possible and what you guys are trying to achieve through the platform you have. I think it's a pretty interesting space, right? That you're trying to go and leverage crypto to solve a real problem, which is maybe not what everything in crypto feels like to people.
Well, yeah, I mean, at a high level, the way you can think of Maple is a platform to run a lending business. So what kind of, there's a whole lot sitting within that. Like, are we trying to run a bank? No. So you have to position your product really carefully. And the way that we've tried to position Maple is that it is targeting middle market lending. And one of our core customers is actually lending businesses or credit funds. So it's people who understand how to underwrite, and we're trying to give them the tools to gather capital. So either gather depositors, LPs, funds. They do that on chain, and then the software so they can send out loans and manage repayments. Ordinarily, if you were a credit fund or a lending business, this is like 5 or 6 systems you have to stand up, and it's about a half a dozen operation staff. So we compress that into a bundle that we offer to lending businesses or credit underwriters to get them to use our platform. And so this really represents where I think the future of finance is going, which is on chain. And the reason I think that is because it is just a much lower cost way to send money, in the same way that a lot of internet businesses were able to spring up because of the suddenly very low cost of sending information versus what came before that. New business models evolved. And so a lot of people will say that what you can do, or what we offer is something that could be done today. That is true, but it is significantly higher cost. You can originate loans, of course, but can you stand up a lending business at a fraction of the cost and start lending loans and being profitable, within your first month? No, I would argue that's pretty impossible absent blockchain.
Interesting. What are the parts of that process where the costs get lowered so much? Because I feel like there's a SaaS version of what you're describing, right? Like just a pure software. I could stand up the contracting and an online portal to acquire capital, and people get ACH money, and you could what I mean, you could do some of this in
Yeah,
a non-chain driven software oriented world, it's like a vertical SaaS product. That's a
yeah,
thing that exists, but you're talking about like parts of the chain that fundamentally alter components of that business. And I'm curious, which components do you feel like are really the cost structure gets
yeah.
fundamentally altered by doing it on chain versus just like a database driven SaaS product?
Yeah. So, I mean, the SaaS product and the database, which is just capturing records of who has what loans and who's made what payments. That's not the. I wouldn't say that's the key innovation here. Instead, it's the fact that you have that kind of database. So that is the blockchain, but it's many people can read and write to that. So it's otherwise I would have a database, and then you would have to trust that I have accurate records here. Um, sitting on my database. But what that requires me to do is, if I want to run that lending business and have that database, is I also have to connect to a bank. And really, to do that, you start introducing third parties like middleware. So I would say, if the banking system was truly efficient, and if the banking system was truly efficient, you wouldn't have multi-billion-dollar businesses like Stripe and like Plaid, who are able to do this and be valued at the billions of dollars that they are, because that would be something that is just the bundled service of how banks work. And so that's really where the margin is coming from. So the transfer of money between banks is fine. It is when you look outside the banking system and you want to operate like a lending business or a financial services business without being a bank. And you might do that if you didn't want to, say, take customer deposits in the same way that a bank does and carry that capital. You want to run like a credit fund, or you want to run a non-bank lending business. That's when you have to start to pay the margin for middleware services and products like Plaid. So just bring it back to a more simplified answer to your question, which is, where does Web3, where does the blockchain make this simpler? It's the gathering of funds. So you're doing that into an on-chain wallet or a smart contract. That's non-custodial. So that means suddenly already I don't have to pay a custodian and a trustee, so that people can trust that I'm not going to do funny things with that money. Uh, that smart contract, you can program it so that it's only sending out and receiving payments from loans, i.e., borrowers. And so that would ordinarily be like an operations staff who's doing that manually each time. But what we can do with the blockchain is program it so that it's just the click of a button when a loan comes up that matches the terms that I've approved for a borrower. And so suddenly what you can have is a lending business that might be maybe $300-400 million in size, so the size of its loans, which could be run by 4 to 5 people, because all of the operations staff has now been turned into a software product that's bundled into the variable margin of my business. It's not a huge fixed cost investment for me just to get
Mhm.
started.
Interesting. You mentioned we've made the kind of Amazon and Amazon video examples, but
Hmm.
things in the environment that were holding you back or that were making it harder for people to adopt en masse the kinds of technologies that you guys have. What do you think those are? Like, what do you think are the equivalent of slow internet or lack of internet penetration or whatever it is that would have made it hard to start an Amazon business? And do you see them shifting over time?
Yeah, well, I mean, the first preceding thing that we required was uh, the ability, smart contracts. So really, it's since 2014. So that was the first impediment that was overcome. What we need now, and so the real equivalent that I see of slow internet is on and off ramps. So the fact is, we've done about 1.7 billion in loans to date through the platform, but those are only to crypto native companies. So it's, market makers, high frequency trading firms that are adopting a delta neutral posture. But what I really want to be able to do is for Maple to serve companies that might be at a fintech or at a company that's operating in the real economy. Maybe it's a large consumer electronics company or a large software company. Those potential clients couldn't deal with stablecoins at the moment, and so what we need is better on and off ramps so that we have a wider set of customers we can distribute or serve through our channels.
Interesting. Yeah. So are the loans you're doing now mostly pure crypto, and like, are there on off ramps for more, traditional fiat money denominations on distributions, payments, et cetera? Or is it mostly stuff that's actually being conducted purely in crypto?
It's pure crypto, but when I say crypto, I'm referring to stablecoins. So USDC is the predominant one. That's 90% of the volume on the platform, and so that is for any reader who's not familiar with it. It is uh, a fiat-backed stablecoin, which is backed by reserves in bank accounts, and so it maintains a one-to-one peg with the US maintains a one-to-one peg with the US dollar. And uh, so generally that's used by the borrowers. They take it down. They might use it for salaries, for vendor expenses, or for the trading firms we're operating with. They use it as inventory on centralized exchanges. What's missing? We can't do fiat at the moment because that would require an off ramp, and so that really needs like a banking provider or some other provider with a deep balance sheet to step in and kind of provide that last mile service. I think my own view, Jeff, is that the future is that most people are going to be conducting most of their financial transactions using stablecoins and doing this on chain. I'm already kind of most of the way there myself, and I really only use fiat when I have to go and pay with a credit card or something. So it's like I manage most of my finances on chain, and then when I need to you know pay off a credit card or put money on a debit card, that's when I do the last mile through a bank. And I suspect that's where the future is heading because it is significantly lower cost, particularly if you're traveling internationally, and it does give you more
Mm.
flexibility.
Yeah, certainly. I'm curious, did you see any shift in thinking in the space or impact to your business with the recent volatility in prices and even in certain instances, volatility in some of the stable coins? Because the stable coins, obviously, like that peg is tied to some liquidity in the market for the stable coins and the ability to actually
Hmm.
maintain that. And we saw some disruption in that. Have you seen that? Was that a blip in your mind, or did that cause some
Hmm.
concern among your customers or people in the space, or shift the way you thought about it at all?
No, I mean the tether short is a popular hedge fund play amongst sort of the TradFi audience. But I mean, as far as I can tell, Tether sort of maintained pretty flawless redemptions on 10 billion or so during June or July. Circle and USDC are the predominant stablecoin we use, and redemptions have been um, performed very well. And they increasingly the stablecoin providers are offering either attestations or proofs of reserve in some way. And so my own view, like I know it's very popular to say that central bank digital currencies are coming, but if I think about this is a service that is most naturally offered by the private sector because it is very engineering heavy, and it's not clear that the central bank can pay competitive salaries to attract the best developer talent and product management talent and maintain that and deliver a product that is not going to be glitchy and that is going to be delivered on time. I think though that if the concern is the stability and how these services are managed, well, poles and wires are managed by the private sector, and this is a regulated utility. If you treated digital stablecoins like a regulated utility, then you can still have private companies offering the service. They earn kind of a regulated, acceptable rate of return, um, but they meet SLAs. I don't think this is a service that's naturally best offered by the government because of their track record at technology.
Well, we see even the Fed's desire to get a real-time payment network, and I wouldn't say that's been the most quickly delivered promise.
Years late, billions over budget, and even
Yeah.
yeah, it's,
But let me ask, do you think there's any sense, at least among the crypto community, that the sort of solution you're talking about is a somewhat centralized set of approach. I mean, you don't have, if you think about poles and wires, you don't have like 5,000 providers and lots of, I mean, it's like a pretty
Mm,
centralized service. You want some degree of scale that provides stability. If you're talking about reserves and stuff like you, you want a relatively larger entity doing that, which runs a little bit counter to the no centralization inherent in the phrase, DeFi, if not the
mhm.
whole, Web3 crypto community. Do you see any resistance to the kind of centralization you're talking about at certain points in the value chain that allow for this kind of, in this case, the stability of stable coins and the tying to fiat currency, which is, I mean, right now, most of us buy things in the real world. And so the connection to currencies that merchants take, I mean, it's a really important thing in at least the
Mm.
medium term. Do you see any hesitance to that because of it kind of runs counter to the ethos of decentralization and no central authorities running the blockchain?
Mm. I mean, you still have no central authorities running the blockchain itself, but what we're talking about is like applications and value-added services that are being provided on top of the blockchain. Now, if stablecoins is one that tends towards more centralization, but you have inherent checks and balances in there and a level of transparency, then I think that's fine. Certain companies will actually only be able to use a centralized stablecoin. They won't be able to use DAI, but you will have various alternatives like DAI or like other decentralized stablecoins. I mean, for our use case, we are trying to serve legitimate known businesses who want to borrow, and so there's not a huge need for that stablecoin to be decentralized because we would never entertain the idea of serving customers who are, you know, actually or likely to be sanctioned.
Yeah, and that makes sense. I can certainly see the argument that the blockchain can be decentralized, but certain elements, particularly the on ramps and off ramps, might be,
Yeah,
or the stability of a stable coin might be tied to more
and
centralized entities. And that doesn't limit the use case of the blockchain to those things, but it provides the
yeah,
stability you need for those cases that are,
yeah.
make it more widely adoptable.
For sure. And I mean, one of the reasons that stablecoins even came about in the first place was banks' reluctance to serve exchanges. So people weren't able to do dollar deposits onto centralized exchanges, and so that was a valuable financial service that was not being provided by the dominant incumbents in the financial sector. So the market abhors a vacuum, and entrepreneurs were able to find a way to solve the solution. So we actually still continue to see that banks aren't serving even large corporates that say, maybe some of their clients want to hold or transact in crypto. And so that vacuum in the market is what is creating the opportunity to provide a service and charge for that product.
Yeah, I will say that most of the banks I talk to now are thinking about or looking at least allowing buy, sell, hold, kind of as an asset, as a speculative asset class, something that like maybe I want to help my clients. But the thinking is rarely gone much farther than that. I'm curious, what are the other like real world use case adoption? I mean, I have not yet bought myself a picture of a monkey with a hat and sunglasses and a cigar or whatever. I don't see that in my future. And I think so many people see crypto as this kind of set of bizarre use cases that feel, you know, in crowd joke, but not really serious and impacting in normal people's lives or useful. Where do you see the real adoption and interesting real world use cases happening, even outside of the lending space you guys are in? Because I think that's something that some people struggle to see because the headlines tend to go to these kind of crazy projects that get nutty valuations on NFTs or whatever. The people go, that's not a real thing. Like that's a fad. And I'm not arguing Bored Apes aren't necessarily a fad, but I think crypto's different. And I'm curious where you see the most interesting real world adoption of crypto outside of that kind of famous NFT project space.
Mm. Well, I think, I mean, in our space, we operate in the lending and borrowing space, and so it is, we currently serve institutional borrowers, and they are taking down loans. Those are crypto native companies at the moment, and so they don't have a viable alternative. But that created the initial market wedge that we stepped in to fill. What we want to get to from here is serving companies that might have access to alternatives, because that's when we start to get to a point where we can show apples to apples comparison. This is a product with a better user experience. It's more convenient to use. It has more uptime than the banking system. So it's a better service for them than going to like a credit fund like a Fortress Group or some other bank. Um, So that would be, starting to lend to maybe corporates who are in fintech, SaaS, or other business lines, but they're going to be somewhat tech forward because they still have to use the technology. The other ones where you've seen sort of quite large adoption or traction have obviously been decentralized exchanges. I think that was pretty consistent with a bull market in all growth or risk on assets, I would say, which is like petered out or cooled down a bit. And then um, and the other one is of course like international payments and remittances. So I think this is the most natural advantage where the blockchain really shines. We have a corporate entity out of Australia that does software development. It receives grants from the DAO, which raised funds from Maple, but we are frequently dealing with vendors overseas, and so it's easiest for us to always pay them in USDC to an Ethereum wallet address. That is lower cost, it's instantaneous settlement versus us copying the Forex interchange fees that our local bank would charge, or people having to wait 3 days for settlement. So I think, you know, the way I view the blockchain is it's kind of like having an international highway system for money. It is a common good that is very easy to access, but it replaces the SWIFT system, which is 40 years old now, very difficult to access, very high level of tech debt for its ongoing maintenance, and this by opening this up, it actually frees up a lot more business models that can be built on top of the technology now that it's open.
I've got to say, Sid, I love your focus on where you can actually provide value to users or businesses or the process. Because I do think so much of what I see in startups in general, but in crypto for sure, is like it feels like a solution in search of a problem. Like
Yeah,
you throw AI and crypto into your startup because that's the
yeah,
sexy stuff, but you're
yeah,
not doing it to solve any real problems or improve any real processes, outcomes, experiences
yeah,
for actual customers. And you're right that I mean it's great to see somebody focus on like where do we actually make things that are happening today easier, better, faster, cheaper,
yeah,
more convenient with these technologies, and not just how do I try and 3x the valuation of my startup by saying crypto at the end of my description, and
yeah,
hopefully that makes people feel better about what we're doing, even if it's not even related to or necessary for the value we're trying to create. There's a lot of that going around
yeah,
these days.
yeah. 100%. It's a lot of people, particularly from like early mid 2021 up until about May of 2022, there was a huge emphasis on what does your token do, absent what does your product do. And so, in a lot of cases, the idea of a token that was associated with a project was being conflated with the utility of the project itself. And I think at this stage, that argument has petered out, and you're now seeing there's much more emphasis on what does the project or what does the product do, and that's unfortunately meant that a lot of excitement and a lot of excitement has drained out of the space, and a lot of skepticism kind of greets new ideas. But there are really very innovative things happening in the space, and this is kind of the ideal time to be doing that and grinding away on products that are delivering real utility because there's not as much noise that kind of drowns out the builders.
No, it's always every technology. I mean, it's the Gartner calls it the
Yeah,
hype
yeah, yeah.
cycle,
The hype cycle,
right?
the Carlota Perez thing.
Yeah, it's always true that people overestimate. It's the old Alan Kay quote too. People overestimate the benefit of technology in the short term and underestimate it in the long term. And so you've got that kind of quick hit where everybody's trying to
Yeah.
cash in, and there's a longer period that I think Gartner calls it the trough of disillusionment, which maybe is not
Yes.
the sexiest name, but it's where actual value is created, right? When
Yeah.
people have forgotten the hype and you're actually delivering on value with the new technologies as they reach maturity and longer adoption. And that's really where
Yeah.
the big businesses and the value for the market are being created, not at the peak of the hype in the which was probably the crazy NFT craze a year or two ago, where you just went, my God, like how are these things worth millions of dollars? And how are people like
Yeah.
it's just crazy. But it's great to see on the other side. What are you most excited about in the space over the next couple of years? I mean, what do you see coming that gets you excited, maybe past the trough of disillusionment, at least in name, to some sort of vision of what's coming down the road that gets you excited?
Yeah, I mean, we still see a lot of institutional interest in what's being built in the space, and so I expect that trend to kind of continue linearly, if not accelerate. And then the other thing, I mentioned before, but like on and off ramps. And so I think when there are widely distributed solutions there, the rate of adoption of this technology will really be, it'll hockey stick. And the right mental model for that is, it's like you're pumping out a bunch of Teslas, but there were no charging spaces anywhere. So it was kind of no good for a lot of people. And what you're seeing now is if you have more on and off ramps, then it's kind of like having that, that charging infrastructure that you needed to really get, to actually be able to take your Tesla where you wanted to go. Um, so I think that those are two of the main things. So institutional adoption, and increased ability for everyday people to access this kind of technology, I think.
Can I ask you about an on-off ramp that maybe I think typically you're talking about the ability to bring traditional currencies into and out of the crypto space. We talk about that, but
Yeah.
there's also this interesting on or off ramp, or at least connectivity to the real world that is around real business or human identities, where
Hmm.
someone would like to use a platform like this, but has a business that's not crypto native and needs to bring not just money, but maybe their identity, their credit worthiness, their payment histories, their underwriting kind of data into a world where it can be leveraged on chain. And that connectivity between real world identity, be it a human or a business, and real world data, payment history or bank transaction history or whatever it is that an underwriter might want into the blockchain world is a different thing. Like, how do I know that I'm really maybe a whole KYC process in the real world for that? That kind of like I can tell you I'm really sending the money to that wallet, but who really owns that wallet is a whole different set of questions. And what do I really know about them? Do you see interesting things happening in that space? Because I feel like that's for a more traditional business to move into your kind of lending platform would require some connectivity to their real world identity and real world transaction history, revenue, P&L statement, whatever it might be. What do
Hmm.
you see happening in that space? That feels like another set of on ramp, off ramp that's not currency related, but is really important for more traditional businesses to be leveraging this kind of technology to transact.
Mm. So that's a middleware interface. So you could bring something like somebody's financial history on chain, and people are looking at like zero knowledge proofs. So you could say, Jeff has a great credit score and credit history, without it being publicly discernible that that is you, Jeff. And then you could share that with who you choose, so that maybe you could take out a loan on chain by sharing it private, sharing that information privately. So I think that's super interesting, and that is a piece that I see a number of teams working on. Circle is working on a KYC, like a tokenized version of KYC. There are several other teams working on similar things. You know what's funny though is that that's not a technology bottleneck. That is a legal bottleneck. Where if you conduct KYC, so Circle could conduct KYC, put a token, give you a token, and I could know that Circle conducted KYC on you. But if I'm another company, I have to then get that past my legal and risk team, who say, no, 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 this is a crime of strict liability. We can't take the chance there might have been an issue there. So you have everybody just duplicating work. So that is a legal bottleneck that is totally holding back something there is already a technology solution for. So those are the interesting things. And that's actually, part of the biggest bottlenecks today are actually on the legal and compliance side. And that is significantly behind where the technology is today. But yeah, in answer to your question, there's uh, I know about 5 different projects that are trying to do credit scores on chain. I think that's hugely important for bringing the everyday people on board and delivering valuable services.
Yeah, I mean, certainly, my credit worthiness is pretty tied to my credit history because my on chain credit score is probably, I don't know, if you were to look at my on chain activity, you would go, "This is a weird dude
Yeah,
who
yeah.
runs a little bit of this, a little bit of that, and has done some weird stuff." And I
It's a
minted an
monkey,
NFT
monkey,
once.
monkey NFTs.
No, I minted my own NFT of a drawing I did just to see what the
Yeah,
process. I'm a believer in kind of see one, do one, teach one. So I went, I won't
yeah,
get it unless I try. So I bought some stuff, nothing like a board ape, and then I minted one just to
yeah, yeah,
look like when you do that. And I don't think it's worth much. I did get somebody to offer on me for my NFT, offered me something, and I was like really excited. And then I
yeah.
realized it was like a friend of mine, and I went, "Oh, well, that's not as exciting." That, like, a buddy of mine sent me like an offer for $5 for my NFT. I went, "Oh, I thought I had like a real like maybe my
Yeah.
art's not as bad as I thought." But
It's like writing
there
the
it is.
first
Well,
copy of a book, and your mom's the first customer.
yeah, to be fair, only so
Yeah, yeah, yeah.
that's where I'm at in my NFT career. But that's I'll keep my day job, I guess. Anything else you feel like we should have covered or I should have asked about this space before we get to my kind of typical closing questions?
No, I think we covered a broad range of topics.
We
Yeah,
did do that.
happy. Yeah, eager to see what the surprise questions are.
My standard ending questions are kind of all the same one. My first is, what's the best piece of career advice you've ever gotten?
Uh, that's a good one. I think so. I think people should. I like the idea of regret minimization in your career choices. Like, I think too many people don't make a leap or take a chance with a different job because they're either afraid of disappointing the team that they're with now. It's kind of this sense of obligation that, oh no, I'd be letting down the team. But I think people are always generally happy if you take a good opportunity. They might be a little bit, a little bit um, annoyed at first, but I've never seen that either kind of with myself or others, that people were disappointed when there was a different opportunity that was that was truly a right fit for someone.
Yeah, I like that. I mean, I think Jeff Bezos is famous for his regret minimization
Yeah,
being kind
Kazuo
of this.
Ishiguro, like Remains of the Day book. I think that's very true, and I've tried to tried to
Yeah,
use that a number of times.
I think it's right. I also think that the moment of greatest fear is a Will Smith video. And I'm get all sorts of stuff in here, but just the
Yeah,
moment of greatest fear is the moment of least risk. And I think it's about like going skydiving, and the moment of greatest fear is before you jump out of the plane. And once you do it, it doesn't seem nearly as scary as you thought it was before. And I think the same thing's true for like taking a risk in your career. When you're
yeah,
sitting there with the job going, should I do the thing? It feels really risky and really scary. And then you do it and you go, this is not as
yeah,
scary as I thought it would be. And so that sense of fear is often greatest,
yeah.
not when you're actually taking the risk, but when you're contemplating it.
Yeah, yeah, yeah. I think that, and like the fear of looking stupid is often what holds people back, far too much.
Very true. Just accept that you're going to look stupid in my life.
Yeah,
Let it go.
exactly. I plan for it.
There's a quote. One of my favorite quotes I always tell my kids is, "Learning to laugh at yourself is the beginning of a lifetime of comedy." And
Yeah,
same kind of thing. If you learn not to take yourself too seriously, a lot of things get
yeah,
a little bit easier.
yeah,
All
yeah.
right, second question. Maybe I'll ask this from the concept, from the perspective of the audience, which is crypto curious but not super in depth yet. What's your best piece of advice for getting started in crypto or kind of learning more about the space? And I'm a big believer in hands on. So where would you have people go to get started or try some things out and kind of get a little bit deeper than they're at today?
Mm. So I think if people like communities, it's good to go to the Twitter of one of your favorite crypto projects. So find its Twitter page. Typically, there'll be a link to the Discord, and that's where you can go to be part of community discussion. So it's kind of like the forum for that project or startup or community. And then the other one would be, I think podcasts are really good. So, if you're more onto the institutional side, I think, aside from yours, Jeff, but uh, Blockworks runs a really good one called Empire. Castle Island has On the Brink, which is really good. I also like the Bankless podcast, but I think just hearing in conversational tone how people describe, their business or their product is one of the really good things you can do. And the other one is don't be af- don't be afraid to go and take a job at a crypto company. Like, there's nothing like doing something as a profession to really learn it inside out. I did, finance at university, but I don't think, I think I had maybe 10% in my head of what I knew after 5 years. The rest came from on the job learning.
Yeah, it's true most places, right? You learn by doing, and you learn from on the job. Training is maybe the wrong word, but
Yeah.
experience.
Yeah. Also, go to a conference. Like, there are a lot of people who don't necessarily work in the blockchain sector, but there's a bunch of conferences coming up in New York over September. There's always conferences in Miami, San Francisco, London, Singapore, and just head along and see some of the panels.
Yeah, it's always they're there for a reason. People go for a reason.
Hmm.
All right, my last question. What's one bold prediction for the future? Can be crypto, can be banking, can be not, whatever you like.
Bold, yeah, bold prediction for the future. Well, I think within 5 years, most people are going to are going to spend most of their financial transactions will be on chain. So I think,
That, that is a bold prediction. I think most people in this podcast audience probably
yeah,
would not have predicted that. So
the
I
other
don't know.
one,
I'll have you back
I'll
to find
give
out.
I'll give you a two-part prediction, Jeff. The other one is
All
that
right.
I think new sectors in it new sectors and industries emerge with, new players come along, it's very rarely the incumbents who successfully transition to a new either distribution channel or set of infrastructure. Like look at the dominant e-commerce retailers are not the big box ones that were set up 40 years ago. And similarly, when the big box format came out, it swallowed up retail giants like A&P. So I think if we look at financial services, I think the ones who are the powerhouses 10 years from now will be the ones who can make use of and adopt the new technology. And I think, obviously I'm biased, but I think the new technology is doing this on chain.
Interesting. Predicting the end of the banks as we know them.
Not the end, just significant reduction in market share and asset balances. I think they go and become much simpler products because they won't be able to compete in business lines with, different things. Whether it's I think they basically get unbundled.
Yeah, I mean, there's certainly a history in the technology space and others of major generational transformations in terms of paradigm tend to not have the same folks winning in the end. It's the rare company that survives a couple of those transitions. So,
Mm.
I, yeah, interesting bold predictions. Sid, I appreciate your time. This was a fascinating conversation. I certainly learned a lot, and I appreciate you making the time to have it with us.
Thanks for having me, Jeff. Really enjoyed it.